Hello, once again, First Lady Harmonic here. Just give you an update on US30. I wasn't posting a lot of videos on this because there hasn't been a lot of movement lately. I guess we see that she's not ready for the move. There's nothing been going on in the United States significant in reference to the coronavirus and things of that nature. So she's just been pretty much ranging. But um, as you can see on the chart, I do have my levels of support and resistance mapped out. On my previous video on GBP AUD, I did show how to trade without having your support and resistance mapped out on the chart. But for the most part, I do have support and resistance mapped out because this is a good area to see where price actually is respecting. This is nothing but the quarters theory. I recommend you take a look at my video. I have a video, a couple of videos maybe on my channel that talks about the quarters theory and how you map them out. It's very simple. What I like about it is once you map it out, you never have to map out your support and resistance again. There are psychological levels where the market, or the institutions, they make their moves, whether it's to take profit or whether it's to move the market in one direction or another. And then you can see here, let's say at 26,750, price has rejected it as resistance, has come back down and formed newfound support, resistance, support. So it's something definite that I recommend everyone take a look at, especially if you're trying to find key areas in which the institutions, the banks, the hedge funds, where they make their major moves. And at the major levels of support and resistance is usually some type of market pattern that determines what direction the price will be going in. So you see it's like right here, major level, 28,000. You see you have an M pattern, a double top. Let's see, 27,000. You don't really see too much, but you see a higher low, probably a little bit of divergence. If you go down to a lower time frame, you probably see something. But just take a look at where we are currently in relative price. We know we're in an uptrend, right? And so once we've made this peak formation high, we've come down and we have not created another higher high. So we just started ranging, but we have created a higher low. So we created a higher low, a lower high, and then we created a higher low. And like I brought out in my previous video on GBP, that simple method of trading and entering the trade. So again, you take your Fibonacci from the peak formation high, you bring it down to its low point. You want to see where it has rejected. So I have a 786. See, price has been at the 786. Let's see what the 61.8 is. I don't keep all of my Fibonacci zones or levels on because I like to keep my chart nice and clean. So I have a template where I'm able to just have this small Fibonacci levels on. So you see here, really within the 786 and the 61.8 is where we see a lot of rejections. You see more rejections, really. Let me just make this a little bit bigger. As you can see, I was scalping. We see a lot of rejections more at the 61.8. Hold on, my alarm's going off. Sorry about that. This is real life. Okay, it's 11 o'clock. So 61.8, but we see that price did come to the 78.6. So I also have my 27 on here as well. And I'm going to talk about that in a minute. Most people know how I use this 27 level. So price has come down all the way to this level. It's created a set of twins. So this could have been your first entry to catch some pips, to see where that retracement would have been. You could have entered right here at the close of this bullish candle and taken it up to wherever it would have retraced to, which in this case, the 61.8 or the 78.6. If you didn't take that trade, and as you see the price started to come down, I have this level 27 here, and this is a very crucial level. A lot of people don't, they use it a certain way. They use it like it's for trend reversal. If it comes back down and it reverses to the 27 and continuation trade, it's going to be a strong trend, which is true. I also use it that way, but I also use it as a level of support and resistance to tell me the direction in which the trend is continuing in. So if the price had came down, and it actually did break the 27, but the next candle, the next follow-up candle was not a nice strong bearish candle. It actually reversed and then closed right back above it. It's telling me that we're still continuing, at least for now, into this uptrend. So we could be coming back to the 61.8 level. We could be coming back to retest the 7886 level, because in my back testing, I found that usually at these levels here, there is a second tap before a full reversal, or either it will continue in its uptrend, which we all know, according to my analysis and my other videos in US30, that my analysis is that this pair is going to go up to at least 29,750. That's what I think is going to happen. So let's get back to this. So now we have twins again. So this is what people want to sometimes want to know, how to get into a trade, or what am I looking for. This right here, it's been such a key thing for me to implement as far as getting into a trade, because usually when you see the twins, the tweezers, or whatever, and they're not even the same. The wicks aren't even at the same level, but they're relatively the same. There's not a big difference in them. Again, I don't worry about what the candles look like. I'm looking for the wicks, because the wicks is telling the story. So you can get in right here. You see price, it starts to rise above the 27. So that's an excellent indication as well. You could have gotten in, if you didn't want to get in here, you could have gotten in when price, make it a little bigger. When you see this hammer now sitting on support, and it has pretty much hammered itself into this level of support, like it's not going to move. So that would have been another entry if you didn't get in on this bullish candle right here. Um, so that would have been an entry. So you have two entries you could have taken. Let's see how many points you would have made from here. Let's say you took this up to the 61.8. You would have had 197 points, which equals really about 19 pips, which is actually great, because trading US30, at least with my broker LMFX, you have to trade a minimum of one contract. So that's $190, or depending on how many lots you have, you see how many pips you could have generated, how much money you could have generated actually on this. And so, okay, so that's that one. So you can take this to 27. I'm entering here. It's actually, I entered a little late, as you can see. But once I saw that it was above the 27, we had these twins here, and just bullish bulls entering into the market. And it's a bullish trend. I'm confident that we're going to be going up. It's just what we may be coming back up into the 28 area. Let's see, 27,750 should be, it's actually right down here. And then again, let's look at this quarter point right here, minor quarter point. You see how price actually was respecting it, playing around at it, but never really fully breaking it. So we'll see. We could be coming back down. But again, what I'm looking for is a break of this level of support to confirm that we're in a downtrend. Usually when I see twins, there's a big movement. So I'm hoping to have a movement back up, and a continuation really into this uptrend. But we'll see. If we break back below the 27, I'm just going to get out. So that's what I'm looking at right now. This is how most people say don't trade ranges, and I agree. Trading ranges can kill your account. But when you're doing it from a simple standpoint, and you're waiting and using like your Fibonacci, and you're looking at certain levels, and let's say you did get in from here, like a 61.8, where would you have gotten in at? Well, where do you see your twins? You see your twins right over here. And then right over here, let me just mark this up. Okay, so right over here is your twins. There's your market pattern as well. It's at a key level of resistance, 61.8 on Fibonacci. And then you would have had some nice pips coming all the way down. You could have taken it to the 27, or you could try to have taken it to this level of support. Usually when you have these twins, it usually goes down to the next major level of support or resistance, and that would be here. So let's see what happens. We may come on, reject here, and come back down here for a double bottom and then rise. But you just have to wait and see what happens. But you would have caught some nice pips, and this is US30, so you don't need that much to make a lot of money. And this is the pair that I trade pretty much. 99% of the time. Um, because it's moving slow, I have some other pairs that I'm trading as well. But anyway, I hope this helps. Um, Stick with me in reference to following this pair to see how it moves. So that way you can get an idea if you want to trade US30 or any other pair. You want to see how it's moving. You want to check the time frames in which it moves. Right now it's 11 o'clock, London close. Lunchtime is about to start for US session. So sometimes there's a reversal. As you see right now, it seems to be making a bit of a move. And I look at the clock, it's 11:10. Okay. So just follow the pair, see what it's doing, use your Fibonacci retracements, have um, your support and resistance, whether it's quarter theories or was it supply and demand zones on your charts. Key thing, if you're looking for entries, look for these, I call them, look for the twins. The twins tell the story. And if you want to get these wick entries or these nice entries, it's because you're looking for reasons to get in. And so, yeah, you could have gotten in here with all these wicks, and you have a bullish engulfing, but you see how it kept playing around, and you had a shooting star, but it didn't really do anything here. This was like some small twins here. You could have caught some pips here. Um, like right around here, this would have been one bullish bearish engulfing. If you had caught this, you could have caught like 5 pips. And depending on your lot size, 5 pips. Sometimes I use 10 lots, and 5 pips is $500, and you're done. So you could just wait it. And I'm on the 1 hour. I was on the 15-minute too. But when you go down to the lower time frames, you're going to see a lot more candles, a lot more noise in the market. So sticking to a higher time frame, the 1 hour is pretty good. And once you get to a key level, you can go down to a lower time frame to see if you can see those. If you see the twins, you're looking for family members. I call them the twins. But I don't want to make this video very long. If you have any questions in reference to this particular style of trading or entries or whatever, feel free to hit me up. Always saying, please subscribe, please show your support, feedback. I try to answer every comment or email that I get in reference to it. Again, I have to have this disclaimer that I'm not a professional trader. I'm not giving financial advice. Everyone's responsible for their own money and make their own decisions. So on that note, I'm going to say, see you later into the next video.